in almost all cases, either if you buy as a rental property or buy for yourself, the process is going to be the same, right? In terms of the regulations, for example, when you're buying a house, the first thing is you need certain capital. It doesn't like there are different things in capital.
Yeah.
Let's say if you have your stock portfolio or your real estate portfolio, it's a separate thing. But the first thing is always going to be, or one of the main things is going to be your capital.
Yeah.
Then you find a property and then you have a look at it if you want to get it appraised, and then you buy that property, and then there are going to be Nebenkosten. So that process
That is the
should
same,
be
exactly. So that's the same, exactly. And how, from a real estate investor perspective, we look at it, we basically look at your individual situation and see how much salary do you have, what expenses do you have, and then how much money do you have saved up. Of course, always deduct your safety buffer that you need to sleep well and all of that. But how much have you really in free capital that you can use? And based on that, we then suggest properties or specifically search for properties that fit that specific criteria. What I can show you is a perfect example of how a good investment apartment should look like. A property that we already sold, right? We have other properties in that same house. But that is like what I'm showing you is then the optimum how it should be, basically a perfect rental property. So don't be intimidated by the big Excel. I'm gonna point you towards the important points. So what we're looking at is an apartment that is in Freudenstadt, which is a very nice city in Baden-Württemberg, around 25,000 inhabitants. Very structurally strong. It's in the S-Bahn nets and all of that. That's why I said, okay, in south of Germany, we can also go to smaller cities, right, which I would never do in the north or east, because everywhere is structurally very strong and big companies. Right? And what we look at is a 97 square meter apartment that costs 355,000 euros. You see the square meter price at 3,600 to 3,700 per square meter. Very good, because this apartment is completely renovated. Right? So we mostly offer completely renovated apartment where everything is already done, right? Where it's like ready to get rented out or is already rented out. And we will get to why this is also very beneficial in terms of getting government benefits, no? Just in a second. Right? You see the buying price is 355,000 euros, means the Nebenkosten and the Kaufnebenkosten, so the closing cost basically is always 10 to 11%. That means 37,000 euros that you need to have in equity in order to buy this. Whether now we use that or not, we can discuss in a second, but you need to have it. Right?
Okay.
There's no bank giving you a loan for almost 500,000 euros when you don't have 40, 50K in your bank account. So that you need to have first in your account. Right? Now, the two most important things are what is your mortgage and what is your rental income. Your mortgage in this case is 1,400 euros approximately. You see here we get a very good interest rate, so 3.3%. That is because part of the property can be financed through a KfW loan. KfW is like basically a government bank or a government subsidized bank that basically gives loans for very energy-friendly apartments. Right? So as this has been completely renovated, the entire house, right? Everything's done. They did the demo. They put the Wärmepumpe in and all of that. So the energy standard is A+.
Okay.
So it's very well renovated. And that's why we can apply for 150,000 euros of the loan. We get a KfW loan. Right?
Okay.
That means we get a lower interest rate and a cherry on top that I'm going to mention just in a second. Right? So that's the first thing, your mortgage. Right? And then the second thing is the rent that you get, which is 1,400 to 1,500 euros in this specific example. So 15 euros per square meter. Of course, this is only for properties that are very nicely done and energy and done at A+ and all of that. For, of course, apartments that are not as highly renovated as this one, of course, we get
There'll be a difference.
less rent, but then the buying price is also less, right? In many cases, this is already a very good buying price, right? So this is, in many cases, you get unrenovated apartments for a square meter price, right? So this is basically what I also talked to you about in the beginning. We have a very strong selection process. So we only offer properties that have very high investor quality. Right, the square meter price is very good and rent is very good. So like the return is very good. And that's what you see here in the cash flow, which is always, in the first 10 years, the important thing is what is your cash flow.
Yeah.
Which you see here, you have 1,400 euros a rent or 1,500. Then you have 40 euros in operating costs in terms of this is the basically Hausgeld that you cannot charge your renter for. So there's a Hausgeld and a nicht umlagefähige Hausgeld. And the nicht umlagefähige is basically just costed you, which is 40 euros for this example, which is very low, right?
Yeah.
Of course, when you don't want to manage the property yourself, we will get to that. Then you put a Mietverwaltung in there. We will get to that in a second. Then you have your mortgage, right? And your operating cash flow is 0 on 0 on this property. Means you need to put nothing in on a monthly basis, which is already very special. Then you save even some taxes, 50 euros. So you get out 42 euros out of this property each month. That you bought, that you 100% finance. Now, of course, most of our clients don't want to take care of the property management themselves. So in all of our apartments, we have property managers because I have a very dedicated job and career, and my wife also, and we don't want to get calls from tenants and take care of small repairs and that stuff. So we have a Hausverwaltung in all of the properties, which costs around 50 euros per apartment. Right?
Okay.
And then they do everything, right? The renters call them if something breaks. They communicate with the craftsmen. So, for example, if the water is leaking, then the tenant calls them and says, hey, water's leaking. Then they call the Handwerker that is locally there. Then the Handwerker repairs it. And you basically just get the invoice. Maybe it costs 250 euros. You pay that. And you, of course, communicate with your property manager. I just do via WhatsApp because it works very well. Yeah, and that's it. Most clients don't want to do that themselves, especially because you almost never should buy in the location that you live. Again, most clients live in the big cities, and big cities is a shitty investment when you're starting out. When you're already rich, okay, park your money in Berlin and Frankfurt and all of that and hope that it appreciates even further. But when you're starting out, again, big cities kill you, right? Yeah. Because then you're done with 1 or 2 properties. And so basically having a Hausverwaltung there would always be the recommendation. And then, of course, let's add that to that. So then it's 90 euros that you have in operating costs per month. And you see the cash flow, of course, changes. So there you have a then negative cash flow of 60 euros. Again, you save taxes with this because you can deduct the full interest. And you have a 2% depreciation of the property. Means you get to deduct 2% of the property's value. So you make a loss on a tax statement, but you make a profit in the real world. That's so special about real estate. That's almost nowhere else possible. So then you still see the
13 euros.
the rent and the tax advantage pay off your mortgage. Means when you keep this for 30 years, your tenant and the tax advantage has paid off your mortgage and you now own this outright. Right? So that's the first important thing. What is in the first 10 years, which is the cash flow? Would be as close to 0 on 0 as possible. And then the second important point is what happens in 10 years. Because in 10 years, you can in Germany, as of now, sell your investment property completely tax-free. So no capital gains tax, no income tax, no nothing. And to calculate that, we calculate with no appreciation above the inflation. That means we just say we assume we have 2% inflation over this whole 10 years. Means your operating cost rise 2%, the rent also rises 2%, and your property value rises 2%. This is a very conservative calculation, right? Because in many instances we have seen way more than that, but we just calculate with the basically inflation. Now what happens in 10 years with a very good property like this? That's what you see here. So your real estate is now worth 441,000 euros. You still have a mortgage of 285,000 euros. You brought in equity initially of 40,000 euros.
Yeah.
And you got a cash flow accumulated over that time of around 8,000 euros. Means your everything deducted, your netto profit, tax-free profit, is 126,000 euros after 10 years. That's already deducting the first down payment.
Okay.
And that's why real estate is so interesting in real estate investing, because you can make from a 40,000 euro investment 120,000 euro profit.
Yeah.
Just that you see, this is an Eigenkapitalrendite, so your return on the equity that you got in is 33% each year. That's why real estate is so interesting, right? Because you can build wealth significantly faster, of course, than if you just invest your money out.
I think we had a really good discussion today. And don't forget to use the first link in the description if you want to have a consultation with David on real estate. And the second link would be the link for a private pension. So thank you, David. Thanks for joining me and sharing so much valuable information. And if you want to listen to our previous conversation that David and I had on private pension plans, you can watch this video. And I also had a discussion with Marcel, again, who is a team member with David on private health insurance. You can watch that video here. So thanks for watching Bleib Gesund, and I'll see you in one of these videos.